The United States Securities and Exchange Commission has played a major role in shaping the ways that regulations affect the cryptocurrency industry, particularly within the last 2 years. The Commission has issued hundreds of subpoenas, a number of no-action letters, and fought a number of legal battles that have helped bring much-needed regulatory clarity to the space. However, there's still quite a bit of progress that needs to be made. Several recent instances have revealed that more understanding of how existing regulations apply to the space is still necessary. Recently, finance magnates spoke to securities lawyer Samuel Katz about how investors and token issuers can survive and even thrive under the SEC's jurisdiction. Katz is a partner at Nellis & Katz LLP, a law firm based in New York. He also acts as the VP and General Counsel for River Incorporated, a startup that is using distributed ledger technology to digitize interest in private funds and fund administration. As a lawyer, Katz specializes in issues related to U.S. securities law, fund formation, and venture capital, with a focus on digital assets and securities. Samuel Katz will also appear as a panelist at the upcoming Barcelona Trading Conference on July 10th and 11th. For more information about the conference, visit btconf.io. That's btconf.io. Sam, first of all, thank you once again for joining us. And can you tell our listeners a little bit about yourself and the work that you do?
Sure. I am a lawyer. I'm a member of the New York and Israeli Bar, and I partner at a law firm of Nellis & Katz LLP in New York. And we also have an office in Tel Aviv where I work out of. And I'm also the VP and General Counsel of River, which is a company that is developing a digitized fund management and issuance platform. I work with other issuance platforms, and I've worked with issuers on digital securities offerings, and work generally with other issuers of securities and on fund formation and VC investments as well.
Quite an impressive list of things. So you are basically a legal expert on securities. So can you give us a rundown, the basic, what do crypto investors in the United States need to know about securities laws?
Well, I'll start by saying that anything I say on here is not legal advice, and I, of course, recommend listeners to get their own legal counsel from whom they can obtain legal advice. But on a general information level, crypto investors need to know about U.S. securities laws at this point is that in the US, to a large degree, most tokens that we would look at, other than, say, clearly Bitcoin and Ether, are very likely to be securities under US securities laws, and therefore are subject to the securities laws of the United States, which govern everything from the initial offering of the securities through secondary trades themselves and the facilitation of secondary trades, which could include exchanges. There are certain other types of assets that might be governed by other regulatory regimes, such as stable coins and other types of tokens that could also be subject to other regimes that are outside of the securities laws.
Okay, so and if I'm a token issuer in the United States, so basically I'm wondering, how do I know that my token is a security? And if I don't want it to be a security, then what are the specific things that I should do as far as that token's functionality?
Well, I think it's a good question, but a complicated one. Mm-hmm. The SEC has provided some guidance as to when a token might not be a security, but in a certain sense, it's very limited. I'm sure all of the listeners have heard the Howey test many times, and it's not necessary to go over that again. But in principle, the SEC is looking for the types of instruments in which people are looking to profit off of them with the work of a small group of people. That's really the principal matter. If we take a look at, for example, what the SEC is claiming in its complaint against Kik with respect to the kin tokens and the SEC's focus on the fact that the tokens were issued with profit in mind. And at the time they were issued, there was a centralized group that controlled the tokens and their functionality. So the SEC had said, okay, those at that time at least were securities. And therefore, even though the ultimate intent of the tokens was to have utility and to be used for payment and for different various purposes on the network that was being created by Kik and for which they tried to get support from other app developers, still the SEC said that at that time it was a security. So the answer is that the functionality isn't necessarily indicative of whether the token would be a security.
Okay, I see. So to that end, like, given the fact that it's, it sounds like maybe it's not super clear then, if I'm issuing a utility token, then there's a chance that it could actually be a security in the future. Or has this Kik case kind of established something a little bit more clarity in that respect?
Well, the SEC also has put out other guidance as to digital assets. It actually came from the specific group at the SEC that's working on these questions regarding digital assets. And the SEC put out a fairly extensive list of factors to which one should look to determine whether a particular token, without giving very specific examples, I would say, but the SEC has given a very long list of potential bases for determining whether a token would be a security or not be a security. And that list is quite long, and it goes through many aspects, such as whether it trades on an exchange, whether it was sold to potential users of the token rather than to investors, whether when it was marketed as being for profit and with the opportunity for it to trade on exchanges. Just the fact that it trades on an exchange itself could lead the SEC to look for the fact that it was a profit. At the same time, the SEC released that guidance. They also released a no action letter talking about Turnkey Jet, which is a token that, in the end of the day, the SEC said that it's not a security. But if you look at the facts of that case, it was an extremely limited case, because in that situation, the token was actually pegged to the dollar. It couldn't be traded. It couldn't be transferred outside of the system in which it existed, which was for the Turnkey Jet company. And its only utility was really to just purchase time on charter jets. So that's the limited guidance we have from the SEC. And then at the end of the day, if you want to issue a utility token, the address the SEC keeps saying is come to us and talk about it. And many issuers have done that, but we haven't yet seen those no action letters come from the SEC saying, okay, this is okay, this is okay.
Right. So I guess, I'm curious if you think, like, given the actions that the SEC has taken, can you speak to whether or not the SEC seems to be sort of like supportive in general of the development of these kinds of assets, or is the legislation moving in a direction that's a little bit more restrictive? What do you think?
That's a great question. And I think we, first of all, maybe just to be clear for the listeners a little bit about how this structure works in the U.S. There's a legislation, which is the law, which is passed by Congress, and then the SEC's job is to enforce the law. So to some degree, the SEC is limited in what it can do by the laws that have been passed by the United States Congress. So we have the existing securities laws, and we have the SEC has a certain level of leeway within those laws to make certain dispensations. So from what I can tell and from what I've heard, and we've all seen the SEC hosting forums and SEC staff speaking in various conferences, stating that they're encouraging this and that they're looking into it very carefully and deeply and getting a better understanding around the technology and understanding the risks, and they do recognize the great potential here. However, I think that at the same time, the SEC, in its role as protector of investors, is very wary of potentially letting a technology go without making sure that all the underlying wheels and rails of the technology work and don't put investors at risk. So where you have blockchain technology, but there are hacks, and you have blockchain technology and you hear about wash trading going on exchanges, the SEC starts to get very concerned for investors. So from the SEC's perspective itself, taking the existing securities laws, I think the SEC is trying their best, but they're also particularly protective over investors. The other thing that the SEC has always been very interested in, and it's a hallmark of U.S. securities laws, is disclosure. And we do have disclosure regimes under U.S. law, and the SEC wants people as much as possible to stay within those regimes. So I think that the first movers are likely to be those who the SEC is okay with their disclosure once they get their full understanding of how the technology is going to look and how the trading will work.
All right. So what are sort of the basic things that, startup crypto companies and investors need to know or can do, to protect themselves? And what I mean by that is, kind of like a compliance 101. How can companies make sure that they're staying out of hot water when it comes to securities laws and companies and investors as well?
I think, first of all, it's very important that companies and any player in the system ensure that they engage experienced and competent securities lawyers, because there are a lot of questions involving that. And I mean, it even goes beyond securities to some degree. I know this discussion is focused on securities laws, but you have in the U.S., you have FinCEN, you have commodities laws. There are a lot of different laws that get touched upon in the U.S. whenever you're dealing with any kind of token. If it's asset-backed token, a stable coin, there are always different legal angles to look at. So whenever you're going into the U.S. market, it's really important to get an experienced lawyer and just tick the boxes, because every different type of asset has a potential different legal outcome and legal requirement. We're all hopeful that we'll find the solutions through existing laws and regulations to make these work, and I think progress is being made.
Great. Yeah. So stick with stay with the experts, basically.
Exactly. It's a challenging space to go alone. I mean, I think we're also seeing that the SEC is going after people. There have been a few public settlements with the SEC, but I think there's a lot more going on in the background. It was even reported a long time ago that the SEC had sent out hundreds of subpoenas to ICO issuers and exchanges, and those investigations are ongoing. The SEC is very active. So you need to be extra careful, and we will definitely be seeing over the next few months to a year a lot more settlements and with the SEC or SEC actions against companies that are engaged in the space, whether it's exchanges, issuers, people who might be violating broker-dealer laws, all sorts of things like that. Just a matter of time.
Yeah, absolutely. Um, so from your perspective as a securities law expert in this space, uh, can you speak to whether or not you'd like to see anything kind of being done differently from the regulatory side? Do you think that that the SEC is doing a good job of both regulating in a support in a way that protects investors and also isn't hindering the industry too much? Would you like to see security laws changed or be applied differently in any way?
Absolutely, it's a great question, and I've actually written about this in the past,
Mm,
and I've discussed this with a number of people. I think that, and this goes to a point that I actually wrote about on Twitter a few weeks ago, pretty specifically, which is there was for a few days some excitement around the Defend Crypto movement, where Kik was trying to raise some few $1 million to defend the SEC complaint against them. And what I wrote at the time was that we're not going to gain anything through litigation. The reason being that under the current laws that were passed by Congress, there really doesn't exist a great framework for what we'd call utility tokens. We're
mm-hmm.
even in a situation now where the companies like Blockstack, who have filed what's referred to Reg A Plus, kind of a mini IPO. They've filed a pretty detailed prospectus about their token, but even so, we're in a situation where it's somewhere in the middle of a few different regimes, and it's not a security, but it is a security. Was it equity? Is it debt? What is it? Nobody really knows. And I think that we need the Congress and the industry needs to go lobby Congress to change the laws and first of all, change the definition or specify the definition of investment contract, so we're not all sitting around banging our heads about the Howey test,
Right.
and because it's just really, the answer is really not clear, and the SEC could write 15 pages about what the factors are, but we could also get Congress to tell us what those are much more easily, and we
Mm-hmm.
can have more definitive answers. And then I think the answer is that we probably need a new legal regime for utility type tokens where that protects consumers and protects investors and has disclosures similar to securities laws. But we need to recognize the fact, and the government and legislators need to recognize the fact that we have a new asset here, a new asset class that never existed before and was made available through this new technology. And we need a new legal regime for it. And the securities laws work great. And there are many people who will tell you, yes, we can do a lot of things within the securities laws, but there are also a lot of more things we could do if we amended the laws themselves. And we can ask the SEC all day to deal with this, but it needs to go beyond that.
Right. Okay. So now we've had a lot of kind of regulatory activity, maybe not activity, but hullabaloo, let's say, in the last couple of weeks, ever since the launch of the Facebook Libra white paper. I mean, it would be great if Congress would take some more decisive action on as far as classifying these tokens and creating this legal regime that I agree is obviously needed. But do you think that that's likely to happen anytime in the near future, especially given the fact that now this Libra token is on the way?
Well, I think that it anything with that requires new legislation, even and frankly any SEC regulatory changes, which are easier to pass to some degree than Congress because it doesn't need to go through two houses and the president, takes a very long time. As to Libra, I think there are a lot of very interesting legal questions raised.
Mm-hmm.
Less so from a securities law perspective, though. As a lawyer who gets very excited about security tokens, it was exciting to see that part of the plan for Libra is to do a digital securities offering, or STO, if you want to call it that. So that's exciting, and I'm sure they'll comply with the Reg D and whatever legal requirements are applicable wherever the participants in the Libra Association are located.
Mm-hmm.
But in terms of Libra itself, it's a different kind of, not necessarily a utility token, it's more of a stable coin, which has its own legal and regulatory issues outside of the securities laws. And actually, now that you mentioned it, one of the points that really intrigues me is the fact that the idea is for have the whole world on this one system. I guess the fact that we have KYC AML requirements in the US and in many other jurisdictions, but those might not be as strong in some of the other jurisdictions, especially where they're really aiming Libra to help the unbanked in places like India and Africa. The fact that there are lots of people who, the reason why they're unbanked is they don't have ID. It's going to be difficult, in my opinion, to put those people who can't really prove their identity on the same network with people who have KYC AML requirements, like in the US and in other jurisdictions. So I think there are a lot of challenges for Libra at this point in order to really go live. We're all still learning more on a day-to-day basis about it. It's exciting, and I think it's getting more people interested in crypto and trying to get a better understanding of it. And from that perspective, if it's successful in bringing more people to crypto, I think that could be a great thing.
Sam, can you tell our listeners a little bit about where they can find you and the work that you do online?
So yeah, you can definitely follow me on Twitter at I am Sam Katz. You can definitely visit my firm's website at nelliskatz.com. And I invite you also to come learn about River, which is the company I'm working with. We're doing some really exciting things in terms of digitizing private equity and venture capital funds. And we could go to river.io and learn a little bit more about River there.
Sam, thank you so much for your time. It's been a genuine pleasure to speak with you.
Thank you, Rachel.